Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 8th of September here in 2022. And we're going to start with the ECB, the European Central Bank, raising their benchmark rate, 0.75, looking for the Federal Reserve to do something similar later in their upcoming meeting. And again, the worry, and of course, Chair Powell, when he gave the Jackson Hole Symposium speech, said we're going to have some pain in the future to combat inflation. And since that peak, the market has declined roughly 10%. Now, from the purpose of tonight's video, as we go into Friday and the week after, let's pinpoint and tie a few things together. First, let's talk about rates. TNX. TNX is your 10-year Treasury yield. And what we're going to be focusing on is the movement from August. And we may have to face some bearish movement in the economy. And we're going to see how that plays out from the Jackson Hole speech in terms of treasuries if the Fed is serious, and we believe they are, about combating inflation. That's going to result in higher yields. Now, they don't control the 10-year or the 2 or the 30-year bond rate, but they do control the overnight Fed funds rate. And that does influence the other markets or the other bond products. So since that point, we have seen a continuation of the uptrend with this series of higher highs and higher lows and a rapid acceleration of the rate in the 10-year Treasury rate. That's TNX. That's, again, the 10-year Treasury note yield. The most recent swing or trade or play being from about 26, and that's 2.6%, up to about 3.4 or almost 3.5%. That just retests the high. And on the same token, the tradable TLT is at new 52-week lows. We'll cover some new 52-week low stocks or high stocks just in the end of tonight's video as an update, but just focusing on the bond market. If the yields go up, the bond market, that includes TLT and IEF, that ought to make new lows, and that has occurred. That's the swing trade to the downside. Similar logic in ZN, which is the 10-year Treasury bond, Treasury note. That's a futures contract. And ZB, there's a 30-year Treasury bond. On the flip side of that, if the U.S. and the Federal Reserve is raising rates, and they're raising rates rapidly, now we are seeing some accommodation, or other ECB and other central banks are raising rates too to combat inflation. Inflation is not just a U.S. event. It is a global thing that the economies and central banks are facing. But nonetheless, the Federal Reserve has raised rates, and the U.S. dollar, seen as a safety currency or safety haven, has continued the uptrend against a series of higher highs and higher lows all throughout 2022. And that even started before that. So we do see a strong positive correlation in the U.S. dollar and TNX, which is 10-year Treasury note yields, or just interest rates in general. Now, that does take a downside pressure on equity futures and equity products, and of course the stock market in general. The NASDAQ being most affected, being a technology-centric index. We can also trade XLK, which is an ETF, right alongside of the QQQ, which is the broader ETF, which is tradable on the options or the share side, or of course the futures products. Similar logic in the top 3 sector spiders, which would include financials. K is again technology. Y is discretionary. So the equity market has been pulled to the downside, bear market downtrend, lower lows, lower highs, all throughout the bulk of 2022. But certain sectors have been on the leading edge of the downside, and that would include technology again. But some sectors have held their own. Held their own means they actually aren't down at 2022. They actually continued a relatively stable, albeit quite volatile, uptrend in their prices. So as choppy and consolidating as XLU, which is utilities, it actually shares a uptrend. And the utility sector itself is not that far from a new 52-week high. Energy is the other sector which has remained positive, and it's had its own bout of volatility in 2022. So that's what we'll be focusing on. Of course, that's tied closely to crude oil being tied both to inflationary concerns and inflationary trends, but also economic forces. And if we are going into, are already in, or recessionary type economic conditions, oil can be a factor or will be slipping with equity products, even though it has been on the leading edge or the bullish side of the year. So that does have other consequences other than inflation. That being, if the economies, if companies, corporations cut back, if consumers don't travel as much, you'll see the price of oil slide lower. So it can be both a recessionary and inflationary type of marker. And this is where the confusion across the board seems to have set in. Because if inflation is a big concern, and it is, why is gold not well above 2,000? In fact, gold has remained in a lengthy, multi-year sideways trading range. And those boundary levels in price, at least, are about 1,700, where gold trades currently, and about 2,000, which is a peak. And the midpoint, or fair value, is just shy of 1,850. And that is where gold has been and has not enjoyed the same type of upward pressure as the commodity markets, such as crude oil, or the downtrend in the bond market. Gold has remained relatively consistent and relatively flat after a strong rally in 2019. And that carried forth into 2020, peaked in mid-year. So we can take a look at the commodities, take a look at bonds, of course, the dollar and equity futures. But let's now shift our focus or attention to stocks. Now, which stocks in the market are leading the pack to the upside? A quick note about today's performance in terms of the market. It was up today, but it was a volatile session. So in the closing, the financial sector was the biggest gainer right alongside healthcare. So right here on the heat map in the S&P 500, we see, and I'll mark this, the financial sector leadership in today's session is a big or broad part of the S&P, and right beside it is an even larger, at least in terms of stocks, and the performance in the market cap sector, which that's healthcare. So those were the two sectors in today's session that were on the leading edge or the bull edge of the rally. That's again financials and healthcare. But technology, we're looking at Google, looking at Apple, which is also a retail, Microsoft, and some of the others that we would see as classically the technology sector or the broader technology grouping. There's where some of the red was in today's session. And other than that, we saw P and utilities on the weak side. Now let's take a look at our stocks. So which stocks in the S&P 500 today made new 52-week highs? Remember, the stock market's far away from it, but these stocks, at least in the S&P 500, are outperforming and are pressing new highs. I like to sort these by market cap. And by sorting by market cap, that just quickly sorts and filters our stock selection. So Progressive, just take a look at some of these on the charts. We'll take a look at the weekly chart and just see how that's playing out. In terms of the new yearly highs, again, we'll take a look quickly at Progressive. And that is a stock, that's an insurance company, but it is continuing to make a long series of higher highs and higher lows in a rising trend. And that just resulted in a new 52-week high in today's session. Behind that is Sempra, which is SRE, not a large market cap stock, but nonetheless, that is up there as well with Republic Services. And we can take a look at these to see what sector they're in. So a quick note about the sectors of these leading stocks would be financials, utilities, industrials, and the other are going to be consumer discretionary. Ulta Beauty Supply, ULTA, continued its uptrend as well. Not all is bullish. Which stocks in the S&P 500 are making new 52-week lows? We would consider those to be relatively weak. And my thought is that which is strong tends to get stronger. That which is weak tends to get weaker. Some of the stocks here would include Verizon, Comcast, Intel, Charter, Dow Chemical, Warner Brothers Discovery, McCormick, and CHD Church and Dwight. A quick look at some of those would include Verizon. Again, 52-week lows. In fact, new lows printing in that stock not seen since 2018. Comcast, which has been on my list of a short and bear candidate stock, keeps getting weaker and keeps making lows, but as does Intel. Intel actually accentuated or accelerated the downtrend we had in motion through the bulk of 2022. And that's off to new lows at 30 per share. That's levels not seen since about 2017. And right behind Comcast is Charter, CHT, again making fresh new 52-week lows and a continuation of the downtrend. And the trades will be short or bearish on pullbacks. Now, Dow Industrials or Dow Chemicals, Dow Inc., not necessarily something we would confirm or compare to the other stocks like Warner Brothers Discovery, and that's just a quick blip to the upside. But on the daily chart, that stock has been in the news quite a bit, and it's making fresh new 52-week lows. McCormick, and finally, CHD. These stocks are downtrending, but they're a little more volatile than a stock that has a more persistent or stable downtrend. Example will be Comcast, also Intel, and Charter, just to name a few of those stocks. So a little bit of a mixed picture, not quite all bullish, not quite all bearish. Volatility's here, and we have the weekend coming up after a holiday week. As always, be careful and safe. This is Corey Rosenblum, tonight's Theo video update for September the 8th, 2022.